Hi guys, it's Stock Curry, and with the sell-off last week, there were so many great buying opportunities. I went on an absolute buying spree, but today we're going to talk about what I bought in the Millionaire Club portfolio. So let's get into it. Now, if you're not familiar with the Millionaire Club portfolio, this is a portfolio that we started in about September of last year. What we're doing is combining these strategies of Warren Buffett and John Templeton, two billionaires in the stock market, and both of these guys were value stock investors. And what they do is they find stocks that are undervalued, they buy them. The one difference between the two is that Warren Buffett pretty much holds the stocks forever. John Templeton sells them once they get back to fair value. So we're taking a little bit more of the John Templeton approach here. We're buying these undervalued stocks, and then once they get up to fair value, we're selling them. And with the sell-off last week, there were a ton of incredible buying opportunities, and a lot of these stocks became extremely cheap. Now, taking a look at the Millionaire Club portfolio, it got destroyed over the past week, as did most stocks in the stock market. Outside of the mega cap tech stocks, pretty much all stocks went down. And amazingly, we're really not losing money. We're actually flat on the year now. So even with last week's massive sell-off, we are flat on the year. And we still have quite a few stocks that are green, but we also had quite a few that were in the red, which just presented some incredible buying opportunities and the opportunity to buy quite a few of these stocks at really low prices. And trying to decide what to add on to was really difficult. I really had to go through these and think about it a lot. A few stocks like IPI, Intrepid Potash, this one's down 29% in the portfolio. And I chose not to dollar cost average into this one because they actually did not have very good earnings last quarter. Still profitable, but it was a big decline in earnings. So that was one I did not dollar cost average into. The stocks I did dollar cost average into, I was looking for companies whose earnings remained strong or in some cases improved, and whose stocks had also gone down quite a bit and were still sitting at very low PE ratios or very low PB ratios. By the way, if you want to know what I buy while the market's still open, you can follow me on Twitter at twitter.com/realscottcurry. I post all of my trades there right as I make the trade. That is twitter.com/realscottcurry. And there's also a link to the entire portfolio on Twitter, as well as in the description of this video. Now let's talk about the 4 stocks that I dollar cost average into on Friday. The first one I bought was ATLC. This is Atlanticus. I bought 4 shares at $24 a piece. The second one is AMTD. This is AMTD IDEA Group. I bought 66 shares at $1.51 a piece. The next one was FINV, FinVolution. I bought 12 shares at $3.88 a piece. And the last one was ZIM, which is ZIM Integrated Shipping, and about 1 share at $24.21 a piece. Now let's get into the details on all these stocks and show you why I chose these 4 stocks out of the 21 in the portfolio we could have chosen from. The first stock I chose to dollar cost average into on Friday was ATLC, Atlanticus. And as you can see here on the chart, it is down to a support level. It has really fallen quite a bit over the past few weeks, and it has gotten down to a very low price. The PE ratio is currently at 4.03 compared to a sector average of 18.96. So this stock is significantly undervalued. ATLC is still profitable, but their earnings are declining. In fact, the earnings have been declining for each quarter for the past 4 quarters. And that's why this stock is such a low price right now. But if those earnings were to turn around, this stock could skyrocket higher in a hurry. Part of the valuation that goes into a stock is the PE ratio, which is the price to earnings ratio based upon the past earnings. And another thing that goes into the stock price is the forward PE ratio, which is the expected PE ratio in the future. And trying to calculate the forward PE ratio is very, very difficult because you have to guess as to just how much the company is going to grow earnings by in the future. And that's what makes forward PE ratios so difficult to look at. But regardless, if you think a stock is going to have lower earnings in the future, that's going to cause that forward PE ratio to be higher, which could cause the stock price to go down. And that's what's happening with this particular stock. Regardless, I still feel like it's a great buy because they are profitable and they currently are pretty undervalued just based upon what they've done in the past. And I always like to check free cash flow as well, just to make sure that they're still making money, because earnings can be a little bit manipulated just based upon the way that accounting practices work. Free cash flow in this particular stock has been positive for each of the past 4 quarters. So ATLC remains a very strong company. This is a company that's a great company. They're just struggling with some future expectations for earnings to go down. But expectations can flip in a hurry, especially once we get out of this bear market and stocks start to go back up again. So that's why I'm very happy to dollar cost average into ATLC right now and start loading up at these very low share prices, because once everything turns around, this stock should perform extremely well. And I want to go back to the ATLC chart once more, because there's another thing that Moomoo shows you that's really helpful, and that is the shorts. So you can see the daily short volume as well as the short interest. Now, the short interest, which is the bottom of these 2 blue bars here, this one has been going down a little bit, meaning shorts are starting to cover. And if you look at the daily short volume, it's skyrocketed over the past week, and this would be a good indication that there are shorts that are starting to cover. You saw another really large bar on this back towards the end of February, and that was kind of where ATLC topped out. That would indicate that that's where short interest spiked, and that's where shorts were really loading up to short the stock. Now it looks like they're starting to cover, so it's another indication the stock might start going back up soon. Now, the next stock that I bought was AMTD, which is AMTD IDEA Group. And we'll start with the shorts. You can see that the short volume has been rapidly increasing over the past week. And you also see on the bottom, the short interest has been rapidly decreasing. This indicates that a lot of shorts are covering here. They don't think the stock is going to go any lower. Now, AMTD is best valued by the PB ratio, or the price to book ratio, which is the value of the stock divided by the value of the assets. And right now, this has a PB ratio of 0.32 compared to a sector average of 1.73. So AMTD is currently has a share price value that is 1/3 the value of the assets, meaning this stock is extremely undervalued. And you can also see that on the PE ratio, or price to earnings ratio. The PE ratio is 1.18 compared to a sector average of 14.31. This stock could literally 10x over the next few years just because it is such a low valuation right now. Now, taking a look at the income statement, just to make sure they're still profitable, you can see that not only are they profitable, but their profits skyrocketed last quarter. This company is doing extremely well. And last quarter's results may be one of the reasons why shorts are starting to cover in a massive way. They know this stock is about to go up. Now, the one issue I do have with AMTD is their free cash flow. This is a very research-intensive company. They put a lot of money into research and development and growth. And as a result, they will get these quarters like 2 quarters ago where they got a huge influx of cash, and then they turn around and spend it all the very next quarter. So we'll have to keep our eye on this, make sure they remain profitable and they continue to pull in, from a yearly perspective, more cash than they spend, but something that we will have to watch out for in this stock. And of course, it's important to understand that just because all of the fundamentals are pointing to a stock going up does not mean that stock will actually go up. anything could happen. There is always risk when you're investing in the stock market. There are no guarantees that what you invest in will actually go up. So I want to stress that this video is not financial advice. This is just my opinions. I'm not recommending you go buy, sell, or hold any stock or asset. This is just what I am doing. You need to go do your own research before you invest. All right, the next stock that I bought was FINV. This is FinVolution. And starting with the stock chart, you can see how it spiked up and then it just absolutely crashed over the past few weeks. And that is correlated with the short interest. You see the actual short volume skyrocketed a few weeks ago, and that corresponded with a big crash in the stock price. At the same time, short interest spiked as well. A massive amount of short selling occurred here about 2 weeks ago, and that's what ended up causing this massive drop in share price on FINV. But thanks to those short sellers, the valuation now has a PE of 3.33 compared to a sector average of 18.96. So FINV is extremely undervalued. Now, like the other stocks, the fundamentals of FINV remain extremely good. The one thing we do have to watch out for in FINV is the fact that this is a Chinese-related company. So any impact from China could cause this stock to go down at any moment. It is very unlikely this would ever get up to the sector average PE ratio. In fact, I'm only looking for this to get back up to about half of the sector average PE ratio. At that point, I would consider the stock to be fair value. And the last stock that I bought today was ZIM. And you can see how this stock has been absolutely rising despite the market going down and despite short sellers loading up on it. And it's not just because ZIM is extremely low valued with a PB ratio of 0.49 compared to a sector average of 0.71. And the rise over the last week is not just because it has a PE ratio of 0.63 compared to a sector average of 2.18. The rise over the past week is because of their earnings. Now, their earnings did decline as expected with shipping rates going down. Despite that, they're still cash flow positive, having increased their cash by $1 billion last quarter. So if the earnings showed a significant decline in earnings per share as expected, and the short interest has actually been increasing, why is ZIM going up over the past week while the market is selling off? Well, it has to do with their dividend. ZIM just announced a $4.60 per share dividend. It's a massive, massive dividend on ZIM for a stock that's trading at $22 a share. Now, the one thing that you do have to watch out for is this is an Israeli company, and the taxes on those dividends are extremely high. So even though the dividend might be $4.60, you're probably only going to see about half of that once it actually hits your account. Still, it is a massive dividend yield, and that is why the stock has been rising, because you just cannot beat the dividend on ZIM. Now, if you want more analysis on all the other stocks that I bought in the Millionaire Club portfolio, I have an entire playlist on YouTube. Just go to my YouTube homepage at youtube.com/stockcurry. And at the bottom, you're going to find a playlist for the Millionaire Club. And if you want to get some free stocks to get you started in the Millionaire Club so you can join in with us, you can go check out all the platforms that I use and recommend at stockcurry.vip/platforms. That's stockcurry.vip/platforms. Go get yourself some free stock and come join us in building wealth in our Millionaire Club Portfolio Challenge. If you got a lot out of this video, then be a good friend and share this video with your friends and family as well as on your social media pages so that your friends and family can join us and they can start building wealth with you. And don't forget to hit the like button and subscribe. And if you missed the last Millionaire Club update, you can watch the last video I uploaded here.